Ripple XRP came into some major game changers as there are more bank endorsements and partnerships confirmed. Will these send XRP to $10,000? As of recently, XRP and Ripple have earned the regulatory nod of approval from one of the world's fastest growing first world economies. And this country's economic agenda for the next decade is quite large and shocking, but definitely possible with the right framework, one that Ripple might just be able to deliver on. And if XRP delivers, then it would prove to the G20 countries that it's possible to deliver on their banking, tokenization, and CBDC needs as well. With this in mind, many folks have been speculating on a $10,000 XRP token. For example, this tweet from Barrick said, "I saw how special XRP was at 0.006. That opinion hasn't changed. We are no longer talking about 51 cents. We're no longer talking about $1, $3, $5, or even 1,000. We may be talking about a $10,000 XRP." Or like this article published by Crypto Alert 6 days ago, XRP is expected to be priced at $9,761. But is this actually possible with the current price sitting at 60 cents and the market cap at about $33.6 billion? I'm going to explain to you in this video how that's possible, and I'll also cover the major partnerships and some key insights from an unnoticed Bank of America report. I'll be covering the technicals, and at some point I will explain what would need to happen in order for XRP to actually reach that $10,000 per token target. So stay tuned. So if you're feeling blessed, comment 777. If you're feeling bullish, comment 777. And if you're going to be the richest person in your family tree, smash the subscribe button. Before we dive in, a quick reminder that the opinions in this video are for informational and educational purposes only and do not constitute financial, legal, or investment advice. All investments, including cryptos, carry risks and potential losses. Always do your own research and consult with a licensed financial advisor. We are not licensed financial advisors, and relying on our content for financial decisions is at your own risk. By watching this video, you agree we are not responsible for any losses or damages, and we do not guarantee any specific results or outcomes. Some of the links below may be affiliate links, and we may earn a commission, which actually helps support this channel and helps us to create value-based videos like this. We also hold some positions in the cryptocurrencies that we talk about, but that's only because we do what we believe in. However, this should not be interpreted as a recommendation for you to do the same. With that said, let's get into the video. In this recent article from Bank of America titled "The Unstoppable Rise of Digital Wallets, a Business Case That Stacks Up." If you are not using a digital wallet yet, you soon will be. The relentless growth of digital assets will see more than 5.3 billion users by 2026. That is no small feat, considering the world doesn't even have 8 billion people in it, and we have population decline in many countries, which means the majority of the world's second world countries and even third world countries will be using digital wallets. The article goes on further to explain the growth of digital wallets is clearly connected to the rapid rise of mobile commerce, with nearly 90% of smartphone users sending or receiving money via peer-to-peer or mobile applications. And I don't know about you guys, but if you've ever used something like a Phantom wallet, which is like on Solana, or a MetaMask wallet on your phone, you can actually send money from person to person relatively quickly, and it's borderless, right? It's frictionless. The transactions are relatively quick. In most cases outside of Ethereum, they're very cheap. So the technology is there. It's just a lot of banks have been slow to adopt it because either one, they don't understand it, two, there's been a lot of mishaps in the market, and so it doesn't feel very trustworthy when you have people like Sam Bankman-Fried, who are quote unquote crypto boy wonder, right, just crashing the market, running off with everyone's funds and doing very illegal things. So now we're getting to a point where these bigger players are starting to actually research it and say this is a great technology that we should implement, other words, blockchain. Now that digital behavior has been ingrained, there is no turning back. And that is a very key point. The two main categories of digital wallets are those that are directly consolidate and connect credit debit cards like Apple Pay and Google Pay, and those that hold some form of currency like PayPal. And if you know anything about PayPal, they've already integrated Bitcoin, Ethereum into their platform. And eventually, when we're talking some form of currency, there will be more that are integrated, especially if they're in the top 10 crypto market cap. In other words, XRP at some point in time once we get real regulatory clarity. For the uninitiated, the key to these payments is tokenization, whereby the user's card or bank details are retained by them and only as an alias or token is shared with merchants. So really think about that. Now we're talking about privacy, and we start to get into ZK roll-ups and all of those things, but we don't want to make things more complex here. We want to simplify it for you. Basically what this stands for is the fact that you would have, let's say, a Bitcoin wallet, and although it is there in the public ledger, let's say I send one Bitcoin from my wallet to a different Bitcoin wallet for my friend. Well, everyone can see that transaction, and it is the ledger. It is an open ledger. However, no one would know who it belongs to. And that is the value and the beauty of these types of systems. So what if you could integrate that in the same manner for a lot of merchants? So they can't see anything other than the fact that they got X amount of dollars from a random wallet. Now, that's not the only beauty or value of blockchain or tokenization. In most cases, this simplicity translates into speed and immediacy, which is, you think about it, like we don't have that right now, of payment with near instant receipt of funds and confirmation. While simplicity and immediacy are clearly benefits to any digital user experience. So speed and immediacy, in other words, settlements that are quick, that are efficient. And when we look at the current major player in the game, we're talking about Swift. With more than 35 million transactions carried out through its network every day, Swift is one of the most common ways to transfer money internationally. The network has more than 11,000 member institutions worldwide, and Swift has become the standard way to have and move money between banks anywhere in the world. So when you really think about it, it is the current standard, but it's such an outdated technology that it won't remain the standard for much longer. Because how long does Swift payment take? Once the transfer is initiated, this is hilarious, a Swift payment can take anywhere between 1 to 5 working days to complete. Another factor is that when the sender and recipient banks do not have a direct agreement, intermediary banks will prolong the process. Then bank holidays, weekends, and schedules can also impact the duration of the transfer processing. So think about how slow this is, and they do it to secure their network of money moving, from fraud prevention, anti-money laundering. These are all procedures that they have to do. But what if the blockchain solved all of those things, right? What if it truly was built on trust, and that is based on a public ledger? In other words, there's real transparency. That's exactly what blockchain solves. Now take a look at Ripple, right, in the XRP ledger, and exactly directly from their website, by the way, how fast their settlements are. Transactions settle on the XRP ledger in 3 to 5 seconds, and they are far more affordable at a cost of not even a tenth of a penny. So these are very affordable, and you can transfer a lot of money very quickly, near instantaneous settlement all around the world that is truly transparent, and it does it 24/7, 365. There are no holidays in blockchain. However, a misconception is that the digital wallets are limited to consumer applications. If people are being paid, then there are growing users for digital wallets. This is particularly the case in industries with independent contractors who need to get paid quickly. Insurance, healthcare, assisted living, and all forms of media and entertainment industries are already using digital wallets to improve the speed and simplicity of payments. Which means, to sum it all up, this doesn't only have to be for consumers, right? For me to send money to you, but you can use it in virtually every single industry, and that would include moving money between banks. But I want to zero in on one major piece of information here, and that is that now that digital behavior has been ingrained, there is no turning back, which means we're already at a point where the adoption is very simple. We just need to integrate a better technology into our current habits. And so the younger generation is going to have access to this all the time, and they won't even be, know that they're using it. In the same way, when I use my cell phone right now, I'm not a developer. I don't do any hardware or software code, but at the end of the day, it just works, and I'm able to use these applications because someone can go into the back end and make it more efficient for me. And on the topic of young people, young investors who actually have money, and this is a study from Bank of America on wealthier Americans in the range of like $3+ million in terms of inheritance and what that's going to look like and how they think about money. It is no longer possible to achieve above average investment returns by investing solely in traditional stocks and bonds. And this is a question that they asked people that are ages between 21 to 43, and then anyone that is 44 plus. Only 28% of 44 plus agreed with this statement, whereas 72% of people that are in the range of 21 to 43 agree with this statement. So in other words, Gen Z and millennials mostly agree with that statement. So that means they're likely to invest in other things. And just how much? Well, let's look at this little chart here. It's a nifty little chart. Ages 21 through 43 believe that they can invest in real estate. So right here you have 6 options outrank traditional investments for younger generations. In fact, younger people seem to favor just about any kind of investment besides traditional options when it comes to growth opportunities. Older wealthy people, in contrast, still put the traditional choices at the top of the list. The one category where all investors seem to agree on investment potential is real estate. And that's just because, real estate has always been proven to be one of those real wealth generators that really does work well even through recessions or in a long period of time. But aside from that, it's really interesting, right? Ages 44 plus are really involved with domestic equities, and that would be US, right? Stocks. Then you have them in the real estate space at number 2. So you can see they're very closely tied right here. But then you have the second best investment for 21 to 43 is actually crypto and digital assets, whereas that ranks literally almost the second lowest, if not the lowest, for anyone that is 44 plus. So we are having a young, revolution when it comes to investments. And if they're going to start to use these technologies and the valuations of these companies like Ripple start to grow, well, guess what that's going to do? That's going to create more FOMO. It's going to create more demand. The prices are going to continue to rise as they're not only investing in the crypto, right, but the companies are actually profitable because we're using them constantly due to our habits that are already ingrained based on the fact that we use our cell phones every single day. I mean, this is a phenomenal study. So right here, these preferences are mirrored in the allocation differences between the two age groups. Older investors hold a lot of more traditional equities, while younger groups hold more crypto and alternative investments. Hooray. So with a positive global economic outlook and, the case kind of being settled back last year, at least in terms of not being a security, I do believe it's emboldened the team behind Ripple and Brad Garlinghouse to really seek, globalization when it comes to this type of technology. And so not too long ago, the National Bank of Georgia chose Ripple, the leader in enterprise blockchain and crypto solutions, as the official technology partner for its digital lari pilot project, which is their CBDC. And Natia Turnava, the acting governor and member of the board of National Bank of Georgia, said, "We are pleased to select Ripple as the official technology partner for our digital lari pilot project following a thorough review of all shortlisted parties." In other words, there were other companies that came along and probably tried to sell them the job, right? But Ripple seemed to be in the best place in terms of their technology and probably their professionalism and their tooling and everything that they offered for the Bank of Georgia to come to them. Now, Georgia not being, the state in the United States, but the actual country. And Georgia is an emerging free market economy. It does have a relatively low, GDP of $33 billion nominal 2024, population of about 3.7 million. However, when you look at their PPP, which is their purchasing power parity, it's the measure of specific goods in different countries, and it is used to compare the absolute purchasing power of the countries. In other words, Georgia has about 3 times the purchasing power relative to other countries at a $33 billion GDP. So they're in a place where, if they start to integrate new technologies and, they can get their population up a bit or their efficiency up a bit, right? Things like this are good pilot programs for XRP to prove its case, prove that it can be consistent, and just how consistent. Well, directly from the Ripple website, they say payments served as a perfect entry point given its clear pain points: high fees, slow transfer times, lack of transparency, higher error rates built on decades old technology. And so they're talking about, other situations and other technologies. They looked at this problem and said, we'll solve it. Today, our cross border payment solution, Ripple Payments, has near global coverage with 80 plus payout markets, which represent more than 90% coverage of the daily FX markets, processing more than $50 billion in volume. We provide financial institutions with simple, secure, compliant digital asset infrastructure, which meaningfully improves those customers create, store, trade, and move value. And so, based on that, right, Ripple has onboarded Santander, Canadian Imperial Bank, Kotak in India, Brazilian Bank, another Indian bank, Singapore. Singapore is a big one. Canada, China, UAE, UK, Australia, Sweden, Japan. I mean, it's going to continue to grow. And if they can consistently service all these customers with no real downtime, and it makes their processes far more efficient and affordable, then guess what? More banks and bigger players like the G20 countries might want to be onboarded. So now for the big player, Ripple arrives in Dubai. XRP gains VARA approval for use in Dubai International Financial Center. And although I could go into this article, I might as well go directly to the UAE website. So right here, you can see I'm on the UAE website, and they say a key goal of the Dubai Economic Agenda, or D33, is to double the size of Dubai's economy over the next decade and to consolidate its position among the top 3 global cities. Dubai Economic Agenda D33 includes 100 transformational projects, which we're not going to read all the way through, but I did find a few really important and key ones. Launching a scale-up program for 30 companies to become global unicorns in new economic sectors. Well, guess what? XRP and Ripple check that list off. So if they deliver, then they might likely be one of those 30 companies, considering that they operate in a very big market that is going to consistently grow as demand and needs grow for consumers and businesses and just worldwide economic global trade, right? We're talking a lot of countries like China are still going to grow, and so is India, this a major emerging market, and they're going to need far more. And so what I'm saying is, if they are operating well in Dubai, then it's likely they're going to be one of those global unicorns. They're also launching Sandbox Dubai to allow testing and commercialization of, guess what, new technologies, and making Dubai a major innovation hub. Something that we have not done in the US so far. We've been snubbing innovation because of the SEC, but I think that is due to change with some new leaders at the helm. If Donald Trump gets in office and then you have someone like Larry Fink as Treasury Secretary, they're both pro-crypto, I think things will change rapidly. And across the board, you can see here that they are going to increase their foreign trade, increase direct investment, increase government expenditures, increase private sector investments, value of domestic demand, literally everything. And we're talking in the many billions of dollars. So what exactly did Ripple secure? Well, Ripple, the leader in enterprise blockchain and crypto solutions, today announced that the Dubai Financial Services Authority, the DFSA, has approved the digital asset XRP for use within the Dubai International Financial Center, DIFC. Licensed virtual asset firms within the DIFC will now be able to incorporate XRP into their virtual asset services. In other words, XRP will be incorporated into different banks and companies and firms around Dubai, which again, if they're used more often than others, then that's going to be a major catalyst, right, for XRP. The independent regulator is committed to the long-term development of the crypto payments and fintech ecosystem within Dubai, as well as providing guidance for companies to set up shop in the free zone. Dubai also has a virtual assets regulatory authority, VARA. We just received that approval. Finally, Dubai's listing of XRP has the potential to unlock new regional payments and other virtual asset use cases on the XRPL ledger. So with all that in mind, and all of these new bank partnerships, and now Dubai on board, and if they continue to use their services and they prove themselves in the global market and they are far more efficient, transparent, they're affordable across the board, it just makes sense. And more banks will slowly start to, hop off of Swift and potentially start using Ripple technologies. Or, as Digital Perspectives has said, maybe there is another play at hand. Maybe a Swift could potentially purchase and work and operate with Ripple. And in this article, you can see right here, it says Swift, being in the industry for so long, has a large network of members and strong cash flow. It is possible that Swift can acquire new tech startups like Ripple to improve its services. Whatever the case may be, whether Ripple takes over a large portion of that market, or there's a merger and Swift buys out more major portions of Ripple, or vice versa, doesn't really matter. They're going to use the technology, which will ultimately be very bullish across the board for this asset, considering it's not any small amount of money. We're talking a $33+ billion asset. They're not just going to scrap it completely. They would definitely want to keep it and find a way to utilize it inside of their entire ecosystem. So how will all of this affect XRP, and can it hit that $10,000 mark? Well, first, let's just cover a bit of this crypto stuff, okay? Because when we really think about a $10,000 XRP, it would just be a ridiculous price. And that's because the market cap would just be too high. It would be a bigger market cap than probably the total global economy, at least at the current amount of circulation, which is 55 billion tokens. And if they continue to release or put those tokens out into the market through their escrow, then we'd be sitting on 100 billion tokens. And I do believe the team would likely do that because they'd want more access for the market, but also it provides them working capital. So across the board, I just don't see a situation in which, those tokens don't hit market, but there is a potential, and I'll tell you what it is here shortly, for it to hit $10,000, but something would need to change. But the first thing I would have to look at is the total crypto market cap. We were recently at 2.7 trillion. We're at 2.4 trillion. And when you test that against something like, let's say, Bitcoin, we'll go ahead and pull BTC up. We'll put it on a percentage scale. You can see that they trade virtually the same, right? At some points in time, they deviate a little. In other words, the total market cap dumps a little bit more because Bitcoin looks stronger. And then other times, right, they're very, lock in step. Generally speaking, the total crypto market cap is mostly Bitcoin because Bitcoin comprises over $1 trillion of this $2 trillion total market cap. However, if I pull up total crypto market cap excluding Bitcoin and Ethereum, which are the two biggest players in the space, right? We're talking over $430 billion in Ethereum and over $1 trillion in Bitcoin, then this would be virtually every other token in the market that is not Bitcoin and Ethereum. And you can see when I place them against each other that we have been, since the start of this bull run, underperforming across the board. In other words, it would have been better to hold Bitcoin and Ethereum versus most cryptos in the market. And maybe you've noticed that by holding XRP or any other altcoin that hasn't done as well as you would have liked, right? Since the start of 2023, the majority of altcoins are up about 114% versus Bitcoin and Ethereum together upwards of 206%. And even since the start of the year, this green line is denoted as Ethereum, whereas the candlesticks are XRP. Ethereum since October of 2023 is up about 127%, while XRP is only up 23%. In other words, you would have had about another 100% gain. So that tracks, right, when we're looking at the total market cap of Bitcoin and Ethereum and then all the cryptos excluding. Why is that? Well, a lot of the times, right, a lot of these money flows are because of institutional players. It doesn't mean that something like XRP isn't amazing. It typically means that they lag. So a lot of the bigger movers will move, or the bigger players will move first, and then what happens is there's this lag effect where something like XRP can really start to skyrocket. And we've seen it in the past, right, in situations like this, where XRP, right, and it was leading at this point in time, but sometimes XRP lags. It really pumps like extremely hard, while Ethereum, right, is kind of just chilling, as you can see on the green line right here, just chilling, whereas XRP is skyrocketing. And so that's typically, natural and normal. They might be lagging or leading just a little, usually lagging, but generally speaking, XRP, when it pumps, it flies. Now, looking at the XRP chart from a weekly time frame, you can see that we've been in a multi-year range, right? In other words, if you would have invested in sometime in like May of 2022, and you would have bought an average price of 60 cents, you would have held with a few highs and a few lows, but generally speaking, you'd be about flat or even. And I do believe that's going to change. If you watch any of our other previous videos, we've explained how anytime we actually get some volume and breaking out to the upside outside of this descending triangle, right, we get some pretty big moves to the upside. And in similar fashion, I think we're getting really freaking close. As you can see, we are officially touching the top of this trend line, and we are painting a new uptrend. So what that would mean is a series of higher highs and higher lows. And when you're talking about a multi-year range, okay, when the explosive moves happen, they happen extremely quickly and they are violent. They move hard, okay? So this was our major low right back here in June of 2022 for 28 cents. Our high of the range is at about $1, and this was again on the SEC July 13th lawsuit court case. And then right here, right, would be our next major low at about 38 cents. And we actually did call that on the channel in one of our earlier videos, and we showed you that based on the VRVP. So we have a stupid amount of support there. That means it's gonna be very hard for XRP to break down below this 20-cent range to 30-cent range anyways. So everything below there is a really good buy to begin with, especially when you have an asset class like this that has been, you know, in the top 10 for so long. And then they're actually working on legitimate technologies and partnerships worldwide. Brad Garlinghouse is no, dummy. He really knows what he's doing when it comes to the business side. He's been in Silicon Valley for a lot of years. He has all of the right connections, and now he just needs to make it happen without the SEC, hounding on him. So that said, we have a series of one higher high relative to this high. We have a higher low right here to here. And so I would argue our next high is going to come above that dollar range. Then it remains to be seen where it goes. But I would argue in a positive or a bullish environment, and BlackRock recently came out with their study saying we are very bullish right now. We're actually overweight in AI and US stocks and Japanese stocks. That if that's the environment, then it's likely that other altcoins are also going to start to pump. And why? Well, when we really look at the total crypto market cap with Bitcoin and Ethereum, and then we look at everything that is in the crypto space that isn't Bitcoin and Ethereum, they still trade very positively correlated. In other words, they peak around the same time, they dump around the same time. Sometimes one is stronger, sometimes one is weaker, but generally speaking, they move in tandem. So we can thoroughly expect that if Bitcoin and Ethereum and the crypto markets are doing really well because the general TradFi markets are doing well, like stocks and equities, right? Then we can thoroughly expect things like XRP to do really well. But in terms of hitting $10,000, I personally do not see that happening. And the only way I think it could happen is if they were really used at a massive scale. They became the new Swift of the world. They had virtually all of the major players and banks using some portion of their technology. And then what happened is in the process of using the XRP ledger and XRP in particular, they had a burn mechanism, which over time, if the max supply did hit market, the burn would get down, some serious amount of XRP to the point where it's like every time it's used in a transaction, right, that amount is taken and burned completely. It is no longer in existence. So the circulating supply is fully out in the market. In other words, it's 100%, and then you have probably 1 billion tokens or less. And if you had a situation like that, then I could see XRP with virtually a lot of banks hitting $10,000. But in terms of a realistic price target, I think it's safe to say that we could still easily see that previous all-time high, at least this bull market cycle, for about 430% from here, which is still a ridiculous gain in the course of a year. And I'm talking end of 2024, probably early 2025. Some folks have targets of $5, which would be a 750% gain, and we'll just pull it up around there, okay? And then other people are talking like 20 to $50. 20 20 bucks would be on the high end. At $20, you would have about a little over $1 trillion market cap for a 3,200% gain. And I'm not saying that we haven't seen that in the past. It's just far less of the supply was circulating, so you had more of a low float, and you had a very interesting environment where there were far less cryptos to compete with, right? Like Ripple was one of the only ones in the space, and then Korea really jumped on board, and we're talking South Korea. And because there was so few in the market, and there was such a high demand, and the market cap was relatively low, you could see ridiculous pumps like this. But in terms of, seeing a pump like 3,200 this time around with a $1.1 trillion market cap, I don't know. That's a little on the high end for me. I think the max that we'd probably see this year is like $10 to $15, and I would argue it's probably closer to 10. And if I was being conservative, I would think $3 to $5 is far more realistic, at least this market cycle. In terms of next market cycle, I don't see a reason why we couldn't have a bull case or some sort of catalyst that would push us into that $20 range, but it remains to be seen. So if you enjoyed the video, go ahead and leave us a like. It really helps the channel out. Shoot us a comment and let us know what you think is going to happen based on these partnerships, or maybe what the next partnership is going to look like. And if you're feeling bullish and you want to discover how to earn more crypto in less than 10 minutes with the #1 play to earn XRP game, go ahead and go to bullrunners.com. You can find that in the description below, and I look forward to seeing you on the other side. Till next time, my friend, goodbye.